So it's a big day today, Thursday, the 1st of August, 2024. The Bank of England are meeting in a couple of hours' time to decide on what they're going to do with interest rates in the UK. Are they going to be kept on hold at 5.25%, or are we going to see that first reduction in over 4 years? As soon as I get that news, I will report it to you later on in this video. But for now, I also want to look at some other data that was released today by the Nationwide, and it's their latest house price index report. So as you can see, house price growth edged up in July. UK house prices rose 0.3% month on month in July. So the annual growth rate has now picked up to 2.1% from 1.5% in June. This marks the fastest pace of growth since December 2022. So if you're a property owner, this is good news. If you're looking to buy, it's not so good news, I'm afraid to say. So commenting on the figures, Robert Gardner, Nationwide's chief economist, said UK house prices increased by 0.3% month on month in July after taking account of seasonal effects. This resulted in a slight pickup in the annual rate of house price growth from 1.5% in June to 2.1% in July, the fastest pace since December 22. However, prices are still around 2.8% below the highs recorded in the summer of 2022. Housing market activity has been holding relatively steady in recent months, with the number of mortgages approved for house purchases at around the 60,000 mark. And while this is still circa 10% below the level prevailing before the pandemic took effect, it is still a respectable pace given the higher interest rate environment in which we find ourselves. For example, borrowers with a 25% deposit, the rate on a 5-year fixed rate deal has been around 4.6% in recent months, more than double the 1.9% average recorded in 2019. As a result, affordability is still stretched for many prospective buyers. Indeed, for an average earner, buying a typical first-time buyer property, the monthly mortgage payment is the equivalent of around 37% of take-home pay, well above the 28% prevailing pre-COVID and the long-run average of circa 30%. Investors expect bank rate to be lowered modestly in the years ahead, which, if correct, will help to bring down borrowing costs. However, the impact is likely to be fairly modest, as the swap rates which underpin fixed-rate mortgage pricing already embody expectations that interest rates will decline in the years ahead. As a result, affordability is likely to improve only gradually through a combination of wage growth outpacing house price growth, which is expected to remain fairly flat, with some support from modestly lower borrowing costs. And this confirms what we're seeing on the ground and what we've been saying in previous videos. We are starting to see an increased number of inquiries from people looking to move home or to purchase for the first time. People are now generally accepting that we are now in an interest rate environment that is going to be more the norm, and that we're never going to go back to those historically low rates like we have seen over the last 10 to 15 years. As such, people's perceptions on the houses that they can afford to buy have become more modest, and people really do now seem to be buying within their means rather than overextending themselves. Now, of course, this resilient in house prices is one thing. The improving affordability is another thing, and whether or not the Bank of England reduced the base rate today or in September, the fact that the base rate is going to be reducing in the coming months and years is also further good news. This all means one thing, that the market that we're currently in, which is a buyer's market, can very, very quickly turn into a seller's market. So if you are looking to purchase a property at the moment, perhaps now is the perfect time to avoid any disappointment. If you've done your calculations, if you've spoken to a broker, and if everything looks affordable and achievable, then why not just go ahead? So the Bank of England base rate decision, you probably guessed by the smile on my face, and you no doubt have already heard the news that the Bank of England have finally decided, the first time in 4 years, to actually reduce the base rate by 0.25%, and it now sits at 5%. This has actually come as a bit of a surprise. Now, we were expecting it to potentially happen this month, maybe September. There were a few concerns going into today's meeting as to whether or not it would actually happen. For a start, wage growth sitting at 5.7%. That's a little bit higher than the Bank of England would like. Services inflation also sitting at 5.7%. Again, a bit higher than the decision makers would like. The recently announced NHS pay rises, particularly for junior doctors, that's potentially going to have inflationary impact as well. And then last but not least, the report that we've just looked at saying that house prices have continued to increase despite the higher interest rate environment. So the housing market has been proving really resilient. These 4 factors were all major concerns and made us wonder, will the Bank of England cut? But they've made the right decision, in my opinion. They have made that cut, and I think now it's going to be a slow and steady decrease. I think they will take their time. They're not going to rush into any decisions going forwards, but for now they feel that the need to ease a little bit of the tightening is the right thing to do. So what does this mean if you're a mortgage holder? Well, if you're on a fixed rate, of course, there's no change. If you've got a tracker mortgage, then you will notice almost immediately this impact on your payments. Your lender will be writing to you, telling you what your payments are going to reduce to. And if you're on your lender's standard variable rate, then That's entirely down to your lender's discretion as to whether or not they will actually choose to reduce their own standard variable rate in line with this reduction. So you'll have to wait to hear from your current lender if you're on a standard variable rate. What's it going to mean for mortgage rates going forwards? Well, a lot of the rate reductions that we've already seen have taken into consideration the fact that this might happen. So I'm not entirely sure that we're going to see huge reductions from lenders, but we will continue to see rate reductions and tweaks here and there. So all in all, in my opinion, that's good news. The right decision's been made today. And I think that possibly going forwards, we might actually now start to get a bit of a boost to the mortgage and the property market as we head out of 2024 and we head into 2025. So like I said earlier, if you are looking to purchase property, now might be the right time because the market can shift very quickly from a buyer's market to a seller's market before you know it. So don't delay to avoid disappointment. Hopefully you found that useful. Thanks for watching. As always, I really do appreciate it. Like I always say to you, if you're watching this on YouTube, then in the comments to the video, you will be able to find a link to the nationwide house price report where you can go into it and have a look at all the detailed graphs. If you're watching me on any other form of social media, then head over to the YouTube channel to have a look at that report if you want to do so. I can't leave a link on any other social media channel, only on YouTube. To find my YouTube channel, all you need to do is go to my profile, click on the beacons link, and then all of my social media channels are listed there, and you can just choose the ones that you feel are relevant to you. But like I said, thanks for watching. Hopefully that's been useful. Take care, and I'll speak to you soon.